Look, the US Treasury is having some serious trouble. It went up 14 days and then came down in just 5 trading days. This is a big problem because Federal Reserve may not be cutting any more rates for next year, and that's why you need to be careful. This is Cal signing in. Guys, a lot to share with you today, but main thing is long time no see online. All right, so let's just look at what is happening right now on the market, shall we? Okay, first of all, the NAAIM exposure is very high right now. You can see that there are 4 times last 2 years, sorry, that by the NAAIM, which is the financial funds manager, when they're at the high level, you can see this is where after that, the market always pulls back. All right. So whenever these guys are buying heavily in the market, right, we all do know that the market will pull back. And undeniable, in the comparison to the S&P 500, it really works perfectly well. So that's the reason why I believe there will be a pullback very soon. And of course, at the same time, if you look at it the same way, when the number is at the bottom, right, that means that the fund managers are not buying, that is usually the bottom of the market. So it's a perfect indicator in some form that whenever such thing happen, it's a very good barometer for you to go into the market. So at the moment right now, I think that it's not a good time to buy into the market. As a matter of fact, right, I think that we should go and reduce further because there's a one level that I want to take note. Now, 5 days from now, we're going to see the FOMC meeting, and it's pretty clear that Federal Reserve most likely will cut interest rate on the 18 December. That will be down by now 25 basis point. But interestingly, if you look at it right now for January, they are not going to cut. It's 4.6% of no cut rate. And I think that is going to happen. And that's the reason why in the last few days we see some market coming down because the bond market is not receiving it well. So you can see from the chart, the market actually was coming down quite frenetically from this area here. Let me draw it for you. From here itself, went all the way here. And then that was where the media sort of covered that Senate record Miller, many people are shorting the bonds market. And as usual, when the media come in picture itself, right, you can see the bond market recovering. So a lot of people just mock and says that, oh, maybe these guys are getting it wrong. But you can see that after 14 days of upside, okay, within 5 trading days, the market just sell down to where it all started. So to me, this is like, no, it's like a thing. When the media could cover this, the retail go in, right? And then that is where the boys push it up again and make the whole thing all go wrong. Then after that, when its time is ripe again, they dumb it down. And now I think this time around, the bond market will slam down to 89 level. I think it will go there. And if the price do go there, of course, the stock market will be affected. That's undeniable. Because the Treasury news shows that the auction now is not doing very well. In fact, not many people buying. As a matter of fact itself, they are kind of worried. So is it really because Stanley Druckenmiller know something that the watch doesn't know? This is something that I always keep emphasizing, and I believe that they will be right. So using the recent unemployment data, you can see that the numbers are very bad indeed. The unemployment data is not doing well at all. And so I suspect that the market will likely pull back a little bit more. I suspect that 43,000 to 43,400 will be a very good level for the Dow to come off. And I think that is where we the first support. Now, if the market go crazy, we may even see 41 to 42,000, but I don't think it'll happen in this Christmas period. So I believe this time around, 43,400 series or 43,500 series will most likely be the support for this before the Christmas period. I mean, take it or not, I mean, it is like Donald Trump era now. I think he will come in and play his part and enjoy the market. I think he did that yesterday in the, he went down to the Wall Street with his family and trying to tell the market that it's good, but the market seemed to sell against him instead. So based on this right now, we put the TLT, the bond market, to the Dow. You can see very clearly that we may have to see the market trading a little bit down. Let me just give to you. You can see that when the bond market, right, basically when it started to come down itself, you can see the stock market also came off. All right. So it's something to take note of. So if let's say we do it in the comparison, then we can suspect that the Dow should be able to see some support somewhere around here, which is about 43,300 to 400 level, 43,300 to 500 level. Yeah, something that is along the way. So I think that this likelihood will happen. Okay, so traders from now till probably 15 to 18 of December, go slow, wait for the market to come down, and then after that, buy into the market. I repeat, yes, indeed, I believe that the Dow Jones will come down first, It is just stabilize and then go up again. That's something that I feel that could be happening, and that could be the last inning for 2025, the rally itself. So guys, hope you like this video. This is Kel signing off. Take care and have a great time. Bye-bye.